How much money could you live off per month? Well, imagine earning that and not even having to move from bed. Welcome to the wonderful world of dividend stocks. These stocks yield investors an annual, quarterly or monthly lump sum relative to their stake in the company, and they can be a great way of taking off the financial burden in the long term. We're going to break down the best options on the market right now, so let's get into it. The first company on our list owns over 500 buildings across nearly 40 states and is a giant of the real estate game. STAG Industries, ticker STAG, are really taking the market by the horns. Specialising in warehouses and light industrial properties, the company is renting out buildings at healthy rates and has a 97% occupancy, which is impressive considering the wider economic conditions. With a dividend of 3.4%, this could be a stock to run out on the road for. Next up is an REIT that specialises in agency mortgage-backed securities. AGNC Investment Corp, ticker AGNC, buys and sells mortgages and has a current portfolio of $84 billion in securities, all of which are backed by the federal government in the event of a default. Despite seeing a decrease in their stock price over the last year, mortgage rates are still at an all-time low, and the 9.5% dividend yield offered could be enough to get investors on board. Speaking of the property market, one REIT that has deemed itself the monthly dividend company is Realty Income, ticker O. Owning more than 6,700 single-tenant retail properties across the US, Puerto Rico and the UK, the company has established a stable and diverse business operation and has displayed consistency, paying its investors over 600 monthly dividends in a row. Realty Income is worthy of every investor's consideration. Next up on our list is yet another REIT, but Armour Residential, ticker ARR, operates slightly differently. Instead of owning property, the company invests in mortgage-backed securities guaranteed by an entity sponsored by the US government, acting more as a financial institution than a landlord. Despite COVID exposing a chink in their armour, the company still boasts over a 16% dividend yield for its investors, an impressive feat considering their recent financial performances.
Ready to take your trading to the next level? Then it's time to start adding options to your trading arsenal. Trading options can be the safest way to turn a modest account into a steady income. It's true, and to help the most people possible learn these income-generating strategies, pro options trader Chuck Hughes has created the Smart Option Strategies report. This report is written in plain English with loads of graphics and easy-to-understand strategies for even the most novice trader. In this guide, Chuck simplifies the entire options world and shows you how to select stocks and ETFs that have increased profit potential. Ready to get started? Click the link in the description to download the Smart Option Strategies report instantly.
Next on our list is another REIT by the name Dynex Capital Inc, ticker DX. As an investor in both commercial and residential mortgage bonds and securities, Dynex were hit hard by the pandemic, but have since recovered from the fall, offering a dividend yield of 8.7% to shareholders. Q3 earnings announcements in the next few weeks will hopefully continue pushing their stock in the right direction, so investors should keep a close eye on their progress. The next company on our list splits its portfolio between skilled nursing facilities and senior housing and has more than 200 investments across nearly 30 states. LTC Properties, ticker LTC, is expecting a strong performance on the back of an ageing population, with long-term care being a priority for the baby boomer generation. As a landlord of these properties, LTC will be set to reap the rewards, and its shareholders could see their 6% dividend increase further. Despite the pandemic severely affecting their operations, Pembina Pipeline Corporation, ticker PBA, are well on the road to recovery. The Canadian company has transportation and storage capabilities for oil and natural gas operations, and has a steady source of revenue through its long-term contracts and businesses within the sector. With a steadily increasing stock price and a dividend payout of 5.8%, this could be a great stock to add to any portfolio. So, there you have it, the best dividend stocks to buy right now. While not exactly a glamorous Wolf of Wall Street, he who dares win strategy, investing in dividend stocks, albeit alongside a diverse portfolio, gives investors the best chance at securing a regular payment from their vested interests.